passive income from crypto while you sleep. That's the dream, right? By 2026, you'll see ads everywhere promising just that through something called cloud mining. It sounds simple. You pay a company, they mine crypto for you, and you collect the profits. No expensive hardware, no crazy electric bills. But here's the billion-dollar question for 2026. Is cloud mining a hidden gold mine, or is it just an elaborate trap designed to take your money? Today, we're going to pull back the curtain and find out. We'll expose the scams, run the real numbers, and give you a final verdict on whether this is a smart move for your money in the future. So, why will cloud mining be such a hot topic in 2026? Let's look at the landscape. We'll be well past the recent Bitcoin halving, which means the rewards for mining a block are sliced in half. This event makes mining Bitcoin significantly less profitable for individual miners. On top of that, many popular cryptocurrencies have moved away from traditional mining, which is called proof of work, to a system called proof of stake. This shift means you can't just use powerful computers to earn new coins anymore. So, the old school way of setting up a mining rig in your garage? It's becoming incredibly difficult and expensive to turn a profit. The competition is fierce, the hardware costs a fortune, and your electricity bill will look like a phone number. This is exactly why cloud mining will look so tempting. It promises to remove all those headaches. No noise, no heat, no technical nightmares. You just click a button and watch the crypto roll in. It sounds like the perfect solution to a growing problem. But when something sounds too good to be true, it usually is. Now let's talk about the dark side, because this is where most people get burned. A huge number of so-called cloud mining platforms are nothing more than modern-day Ponzi schemes. Here's how they work. It's a simple but brutal formula. You sign up and buy a mining contract. The platform shows you a fancy dashboard with numbers ticking up, making it look like you're earning crypto every single day. Feeling confident? You might even reinvest your earnings or tell your friends about it. The platform uses the money from new investors, people like your friends, to pay the profits to the early investors, people like you. This creates a cycle of trust and excitement. You can even withdraw a small amount at the start to prove it's real, but it's all a facade. There's no actual mining happening. There are no warehouses full of powerful computers. It's just a shell game, shuffling money from new victims to old ones. The biggest red flag? Ridiculous promises. If you see a platform offering guaranteed returns of 1%, 2%, or even 5% per day, run. That is a giant flashing warning sign. No legitimate investment in the world, especially not in the volatile world of crypto, can guarantee those kinds of returns. The scheme continues until the flow of new money dries up. Then one day the website disappears, the withdrawals stop, and everyone's money is gone. So, how do you tell the difference between a real operation and a complete scam? It's tricky, but there are key differences. A legitimate service is more accurately described as hosted mining. In this model, you are essentially leasing a specific real piece of mining hardware that exists in a real data center. You should be able to know the serial number of your machine, see its operational status, and have some level of control over it. These companies are transparent. They'll show you pictures and even live video feeds of their data centers. They have a physical address, a real support team you can talk to, and a long, verifiable history in the business. On the other hand, the scams are completely opaque. They use vague terms like shares in our mining pool or slice of our hashing power. They never show you any proof of their mining farms. If you ask them where their facilities are located, they'll give you a vague answer about security concerns. They won't tell you what specific hardware you're using or what its performance is. Their contracts are often confusing and full of hidden fees. The core difference is transparency. A real company has something to show you. A fake one has everything to hide. If you can't see the machines, there probably are no machines. Let's do some simple math to prove why these scam platforms are lying. They promise you things like 800% APR, but let's see if that's even possible. Real crypto mining has three major costs: the hardware itself, electricity, and maintenance fees. In 2026, the network difficulty for mining major coins like Bitcoin will be astronomically high. This means you need incredibly powerful and efficient machines just to have a chance. These machines consume a massive amount of electricity. We're talking about industrial-scale power consumption. So a legitimate mining company has huge overhead. They have to pay for the facility, the cooling systems, the staff, and that gigantic electricity bill. After all those costs, the profit margins on real mining are actually quite thin. A good year might see a return of 50 to 100%, and that's if the crypto market is doing extremely well. So when a platform promises you 2% daily profit, which adds up to over 700% a year, it's mathematically impossible through actual mining. Where is that extra money coming from? It's not coming from mining. It's coming from the pockets of new investors who are about to lose everything. The numbers simply don't lie. Always be skeptical of guaranteed high returns because the underlying math of mining doesn't support them. So, what's the final verdict for 2026? Is cloud mining a viable investment? The hard truth is that for the vast majority of people, the answer is no. The space is absolutely flooded with sophisticated scams that are designed to look legitimate. The risk of losing your entire investment to one of these Ponzi schemes is incredibly high. While a handful of legitimate hosted mining companies do exist, their services are often not profitable for the average small investor. After you factor in the monthly fees, the electricity costs, and the volatility of the crypto market, you might find that you would have been better off just buying the cryptocurrency directly and holding it. So, here's your checklist before you ever consider putting a single dollar into a cloud mining service. 1. Can you verify their physical mining farms? 2. Do they let you choose a specific mining pool? 3. Are their fees and contracts crystal clear? 4. Are their promised returns realistic, or do they sound too good to be true? If the answer to any of these is no, you should avoid them. In 2026, the smartest play will be to steer clear of the hype. Focus on proven investment strategies, and remember the oldest rule in finance. If it sounds too good to be true, it always is. Thank you for watching. The crypto world is exciting but full of traps, so always do your own research. If you found this video helpful, please give it a thumbs up and subscribe for more content that helps you stay safe and informed in the world of crypto. Let me know in the comments if you've ever had an experience with cloud mining. Stay smart and stay safe out there.